Hey everyone, welcome to the new episode of the AI Buzz Business Show, the show where you learn about business, entrepreneurship, tech, startups, and everything you could think of. Today I have with me a special guest. My guest today is Hamid Masri. Hamid, welcome to the show.
Thank you. Thank you for having me, Ahmed. Nice to be here.
Hamid, if you were to identify yourself or to tell the audience who is Hamid in one word, what would that one word be?
Student.
I love that. Uh, Since we started with students, I want to ask some philosophical questions before we dig into your journey. Uh, you've done a lot of ventures. You worked in startups. You're a venture capitalist now. What? How do you define success? Is it
That's a
just is it just the financial aspect of it, or like how do you see
Hmm.
success?
Well, look, thanks for asking this question. I think it's an incredibly simple but complex, very, many layers to this question. Look, I think first and foremost, I see myself. I don't see myself defined as a person doing a job. There are many aspects to my life that I feel kind of conspire to kind of to kind of form an opinion or to form maybe a view about how I see myself in the world. So I think from that kind of from that kind of route, I always have kind of associated success with happiness. So I feel a successful human being is one who has strong relationships to his or her community, family, and most importantly, to his or herself as well. So for me, success is having inner happiness and doing the things you want with people you want at any time you want. Which is I'm borrowing from some author here, but I truly believe that success equals happiness, or happiness equals success, rather.
I love this answer. You're in the world of venture capitalist and investing, and we've noticed in like since COVID up until today, we've been hearing this that certain VCs just spend a lot of money, and all their goal was growth, growth, growth. As a venture capital or as an investor, where do you draw the ethical line between returns, maximizing returns, and the stakeholders and the founders and the startup and the healthy startup building?
Well, look, again, I think ethics is a very kind of deep subject, and I think by virtue of everyone having a different opinion or a different perception about something, people can hold very different kind of views on what's ethical and what's not ethical in a given situation. So what I like to do is I just like to talk about incentives, okay, and I think incentives in a capitalist game really drive human behavior in a big way. So, for example, um, founders are obviously among the smartest of our species, right? So they're imaginative, they're innovative, they're adaptable. They figure out all the angles before anybody has a chance to even know about the topic at hand. So I feel like if you're playing an economic game or a financial game, and all of the investors are kind of unified in their view that they will pay you, the founder and the shareholders of the business that the founder has founded, um, as a multiple on sales, then obviously that's going to create an incentive for people to just go after sales, right? And then kind of get into ethical areas here for me at least, where the easiest thing to do is to sell a dollar for 90 cents, right? So we can sell something at a loss because we know that investors are going to come in and pay us down the line a multiple on that dollar that we just sold for 90 cents. Now, look, I think this is where you kind of separate people who know what they're doing versus those who don't. I feel any investor, any founder who's smart wants to play a long-term game, right? So I think Naval Ravikant was saying, play long-term games with long-term people. And I think, that kind of sums up a lot of my philosophy, actually, or at least how I like to kind of do things, is that, look, I mean, today you're doing something that is not going to be sustainable down the line. Do you go for the quick gain or the vanity gain versus looking after your stakeholders and your shareholders and kind of doing right by them? Because a lot of the times VCs really don't know the intricacies of these businesses. I mean, obviously they should know, cost of acquisition and how much it's costing you to sell the service. But I mean, essentially, I feel it's on the founders to kind of think about long-term gains with these shareholders, and it's also on the shareholders to avoid or the investors to avoid situations where they enter companies for the wrong reasons, or they're kind of riding a fad that's going to disappear. So that's just kind of my 2 cents on it.
Okay. Given these thoughts, you joined Silicon Badia nine months ago or at the beginning of the year. Uh, why did you choose Silicon Badia specifically? Do they align with what you just spoke about? Why 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 Silicon Badia specifically? Why not another firm? Why not start your own fund? And then a question that pops on in mind that for anyone who's not familiar with venture capital, how does one become a partner at the VC firm? If you could address these 2 points.
Sure, for sure. I'll do my best. So look, yeah, I joined Silicon Valley about roughly a year ago, a bit under a year ago. I'd always been I've always been of the mind that my long-term career goals were to be on the investor side. And I'll tell you a bit more about that in a bit. But essentially, I started my career doing investment banking on the sell side, what we call the sell side. So I was advising clients who were either looking to raise debt or equity or a combination of both. And eventually, when I moved back to the Middle East, I co-founded a company with Mohammed Nasif, who was my co-founder, and we basically did financial advisory for the small guy. So we were doing, we both had worked at investment banks that just kind of address, the issues of large corporates, Fortune 500 companies, and the like. And we were thinking, look, I mean, no segment is more in need of these, services and that expertise than SMEs in our region and startups, because they form the foundational backbone of employment, of GDP. So we always kind of had a bit of an impact lens in that. And through my work, I figured, look, I mean, if I can contribute on the buy side, so the side that has the capital to kind of mobilize, then that's where you can kind of make the largest impact. But then, you kind of have to go through the different phases before you get there. And for me, being a founder and working on the sell side made me understand the issues that companies go through in a way that I don't think I would have had I just started on the buy side. So back to that advisory business, first started off as a company called Levant Corp, then we evolved and rebranded into a company called Sequence. As Sequence, we had a vision of just kind of helping startups grow and SMEs and just kind of companies in vital sectors. And we went to we had a small fundraising round, and we went to a company called Accelerator Technology Holdings for funding. And we got funded by Accelerator, and we partnered with Dr. Fawaz Zabi and Emil Qubaisi and Namiq Zabi, who are actually the founders of Silicon Badia. So 10 years ago, exactly, almost, we got funding from what would eventually become Silicon Badia. So for me, joining Silicon Badia was kind of a no-brainer 10 years later, because it's kind of like coming back home. And
Wow.
just I worked with these guys for so long, and we built personal relationships. And at the end of the day, VCs are partnerships, right? So you're sitting there with a bunch of smart guys, and you're deciding on how to allocate capital and you're deciding on what your shared vision is about the future of the region or the sector you operate in. And I really want to do it with those guys. So that's really how I ended up with Silicon Valley, and why I did that. And as to kind of, what somebody needs to do to become a partner at a VC firm, honestly, I can only speak to my experience. I'm sure there are so many roads that can lead up to here. And you've had spectacular guests on this podcast that have, VC background. So for me, it was really about learning. It was just constantly learning about how to look at companies, how to understand the value drivers behind, what kind of makes them tick, understanding founders really well and advising them really well, and then kind of being a founder myself, raising money from venture capital, understanding how that kind of thing works. I think that that was my road to partnership.
Okay. I bet you joined Silicon Valley 9 months ago, but as you shared in your story, you've met the partners at Silicon Valley 10 years ago. Have you heard some interesting story about how they started, or how did they come to existence, or why did they start Silicon Valley?
Of course. No, I mean that was primarily the pull why I went and spoken to them. So you know, Silicon Badia's co-founder, Dr. Fawaz Zorbi, came from the private sector. Then he spent some time as as a minister in the government, and he was taking care of the IT infrastructure in Jordan, but obviously he was also involved in a lot of things regionally. So to me, they're pioneers. I mean, they're one of the first, if not the first, institutional fund in Jordan, in our region, investing in startups when nobody really was looking at the space, right? So you're talking about early mid 2000s, when VC was a very kind of obscure niche kind of thing. Now it's obviously very mainstream, and we have celebrities and so on and so forth. So for me, it was very important to be part of that story where you kind of go in with the pioneers. They have institutional knowledge. They understand the landscape really well. And yeah, I mean, they've been at it for a good 20 years now, and they've seen a lot of successes, lots of kind of challenges as well, lots of changes in regions, and it's all kind of baked into the brand.
You mentioned changes here. As a VC firm and as an investor yourself, how do you tackle these changes? And do these changes in technology in the region change how you invest?
Yeah, sure, of course. I think as a partnership, you kind of want to have a thesis on what you think is going to be successful in the region. And one of my ex co-founders, a person I truly respect, love, and admire. His approach has always been like, his name is Zaid Farih, by the way. He's a founder Propeller and so on, and many other things. He's like, look, you need to kind of imagine what the world's going to look like in 5 years and work backwards from there, right? And I think like he captured that so well. So I'm paraphrasing obviously from him, but back to your question, it's about how you see the landscape changing, whether it's regional or whether it's technological or a combination of both, and kind of investing before it's obvious that you need to invest in this space, right? So you see a lot of bubbles, and you see a lot of cycles, you see a lot of kind of dismay, and you see a lot of you see a lot of turmoil sometimes. But in the middle of these kind of changes, you kind of form a new thesis about how the world's going to emerge out of that. So 10 years ago, if you're looking at venture capital portfolios, I think very few of these regional companies would qualify as real tech today, right? So they would be tech enabled. There's like an offline component that's really large. SaaS wasn't a thing in our region about 10 years ago. Now, every other company we see in our pipeline is, doing something in SaaS, digital infrastructure, like zero offline kind of involvement. So yeah, look, lots of changes. that means there's going to be winners and losers, right? And that's why when you're doing portfolio construction, it's all about sticking to the thesis you have and your strategy.
You go back and you mentioned that as a venture capital, you have to look and imagine what the future will look like. I want to first understand, where do you view the MENA region today in terms of investing in tech? Where are we standing? What's our position today? And what do you imagine the future to be?
That's a really good question. So look, I'll first start with definitions, right? So I never look at the MENA region as one region, right? It's a combination of regions put together, held by a common language, but very uncommon, or let's say disparate regulatory frameworks, currencies, political regimes. It's a jungle. Like, anybody who comes into MENA thinking they're coming into a common market is due for a very rude awakening. And even when we look at demographics, in fact, I forget what the article was called, but one of my ex co-founders and also somebody I love, respect, and admire deeply, Nafiz, he wrote an article about the different demographies within the MENA region, and he coined the phrase chicken nuggets as Western educated Arabs, let's say, how they fit in the different kind of markets there. I don't want to spoil the article for you, but he has a beautiful Substack which you should check out. So yeah, look, I mean, I don't think you can describe our region as one. So with that being said, I think that the biggest changes are happening today in the GCC, right? With the opening of, or the liberalization, let's say, of the Saudi market, the number of companies that are being funded out of there. Thank you. I think you're seeing the biggest change and the biggest waves being made from the Saudi market. So I read an interesting report by Clearworld a couple of weeks ago that estimated that the public investment fund in Saudi Arabia has funded or has dollars to invest either directly or indirectly that could equate to 4 times the number of startups in the entire MENA region, right? So there's obviously, that was a very interesting statistic for me to read, and I urge everybody to read that report by Clearworld. There's just a lot of dollars now coming in to kind of fund venture, and I think that can be transformative to our region. So I do believe that we're at the cusp regionally now, so across all countries, of major software overhaul. So how Mark Andreessen said software is eating the world, a couple of decades ago or so. I think that's more relevant to the MENA region now more than ever. And I think you're going to see a lot of digitization happening. I know it's not as exciting and as sexy as some of the deep tech that's happening in Silicon Valley or on the West Coast where you're at. But I do think that mass business adoption to software is going to happen now, and it's happening as we see it. I think companies that were traditionally funded from the seed round onto Series A are now finding it difficult to say, okay, what's our destiny now? Are we going to get Series B funding? Are we going to go to private equity route? Are we going to, I personally think that you have a lot of good companies out there that are in the $3 to $5 to $7 million annual recurring revenue range that are struggling to make it beyond the 10 million, 15 million range to become profitable and to kind of accelerate their growth across the region, which again is very, very difficult to traverse. So I believe, I do believe that we're entering an era where the opportunity for M&A to happen will be very apparent. I'm not sure it's going to happen because it's very grimy to do consolidations and acquisitions, but I do think it's there to happen. And I feel in Saudi Arabia and in the GCC, we have a major opportunity to have liquid markets. So for venture capital, one of the toughest things to kind of garner are exits, right? So You kind of hope for a trade sale, like a bigger strategic to come and buy you out, whether it's Amazon Sue or it's,
Uber.
yeah, exactly. And I think, kind of building startups with only that route in mind makes it very difficult for startups to kind of succeed and reap the rewards of an exit. But I think in Saudi and the GCC, in particular in Dubai and Abu Dhabi, we have a chance to also build equity exchanges that are liquid, where retail investors can kind of come and participate. So you can have a venue for companies who have achieved specific milestones of profitability and revenues to kind of list there, to kind of achieve liquidity. Because it's not just about the founders, right? It's about the stakeholders who are funding these businesses, and more importantly, it's about the ESOPs that are being granted today, right? So every startup, I think that's worth its salt, has employee ownership, and you need to reward those people for taking the risk and building value.
Okay. I'm gonna play the devil's advocate here and push a little bit back. Um, I've heard from a couple of founders in the region that yes, we have a lot of money. Yes, there's a bunch of liquidity with the institution funds and with different VCs. And since you were a founder and you're now a VC, uh, a lot what's being said is that okay, we have this money that we're investing in outside of the region. That's one. A lot of this VC capital is being invested outside of the region, or if it's invested in the region, it's invested in uh, the second, the third or fourth delivery startup, or the third and fourth Uber, quotation on quotation, and not in the real tech being built, the construction tech, the agri tech, the deep tech that some of the founders are building in the region.
Look, I think it's a good point, Ahmed, and I think it's good to push back on this. I'll tell you, kind of having been on both sides. So if I put my founder hat on, I really have to believe in a problem for me to go out and kind of leave everything I'm doing to kind of solve it. And that's kind of, I think, inherent in all founder DNA, right? So if the problem that I'm solving or I'm trying to solve does not kind of represent itself in an economic model that's fit for VC, then I shouldn't be talking to VCs.
Okay.
And I really think this is a founder issue. Because look, man, I think the easiest thing to do is to say, we don't have funding, so we shouldn't do this thing. Or we failed because of a lack of funding. And look, I mean, it's among the top 3 reasons why startups failed, right? Lack of funding. But I feel like, there's a measure of truth in that for sure. But I think there's also a measure of truth in the responsibility falling on founders to convince pockets of capital to invest in them, right? And it's not just VC. I think VC is, all over LinkedIn, all over the news. It's now like the stuff of legend. But there are so many venues for financing, right? From traditional banking to alternative banking. There's DFI money, there's grants, there's like a ton of stuff, that you can kind of access. So for me, a founder that's complaining about VCs investing in third-party logistics or in delivery are kind of missing the point, which is you got to pitch yourself as the thing that's going to make VCs money more than the other guy. I think that's kind of your job,
Yes.
And look, I mean, a lot of VCs are investing in what's hot right now, and I think the returns will kind of settle the score, right? So if it was more economically worthwhile to invest in this deep tech as a VC, and it has this the return multiples required, amazing. Then others will follow suit later. But a lot of these super risky, lacking a business model kind of tech plays, are traditionally funded by universities, governments, and so on in the West. And I feel like a lot of people complaining about the lack of funding are really complaining about the lack of, asset classes funding these things versus an attack on VC.
Okay.
If that makes sense. Yeah.
No, that definitely makes sense. You mentioned the market being liquid. Uh, I'm not attacking these 2 startups, but we saw Anghami and then we saw Swivel go and become public. And for both these startups, we saw the stock price go down really bad. When we speak about the market being liquid, did these startups go public early? Uh, like, because when we talk about the market being liquid, and then a retail investor is going to come and put money behind these startups, and then after maybe less than 2 years, the market price is going to go really down. Is that the market being really liquid? What's your take on that view?
Wow, these are like really interesting questions. So I'll tell you, and again, I'm going to go back into definitions, like we did earlier. So I think in Anghami and Swivel's case or cases, they really didn't go public through a traditional IPO, right?
Okay.
So they kind of bypassed IPOs and listed via SPAC, which, for people who don't know what SPACs are, it's a special purpose acquisition company. So essentially, it's a company that people set up, they go in and they buy, let's say Swivel or Anghami, and then they kind of merge with a listed entity on the US stock exchange. So it's kind of a shortcut to an IPO. And what you're really shortcutting, by the way, is a lot of regulations regarding filings, disclosures. There's like a whole host of boxes to check in an IPO that you don't have to check when you're listing via SPAC. And I think if you look at SPACs for the most part in the US, for the most part, I can say they were kind of a failed experiment in value creation, right? So I think the people organizing the SPACs made money,
Yes,
but
and
the people,
this is why a lot of people on Twitter, they attack Shamat Palihapitiya because he was the man behind SPACs, and and that happened. So
yeah,
this is why I kind of phrased the question is it the right way to go through SPACs and leave the retail investor holding the bag at the end of the day?
I really don't think it's the right way, to be honest. And look, like the other thing is though, if you're a retail investor and you're looking for and you have, let's say, $10,000 to invest in US equities, okay, you would look at companies in the same lens, right? So you're analyzing, prices to earnings, you're analyzing revenue growth, you're analyzing margins, you're analyzing, overhead, you're analyzing all of these things, right? But two things really stick out. How are companies comparing side by side when you look at sales and profitability? And I think in the cases of a lot of the startups that wanted to go public, they wanted to go public while they were loss making, right? And I know, look, Facebook, Twitter, whatever, like they spent years being loss making, right? But then they had unit economics maybe that were easier to kind of decipher than a lot of these other companies that are going for public listing. So it's not a surprise to me that you go listing for $100, you're burning capital like crazy, you are miles away from profitability, your unit economics are a bit gray, these things happen, and your stock price will plummet. So I think, timing to IPO is it's increasingly important. And I think some companies had to learn that the hard way.
Yeah. As an investor and as Badia's vision, what are the trends you see in the MENA region coming in the next 5 years? Is it SaaS? Is it fintech? What are the trends you look at, and what is the vision of the future you see?
Yeah, so look, I think we touched on that before. So I'm really I'm of the mind that I think we have a lot of green space now in the B2B SaaS space, and the digital infrastructure space. So basically the pipes that kind of connect everything together, if you want. A lot of these pipes are not visible, so like they're kind of software that other apps can run on, and a lot of these are basically automating manual processes. So, in the MENA region, in the Levant and North Africa, at least, we still have a ways to go in automating processes. And I think we're going to see a huge wave of that. I think you're also going to see a lot of funny money going towards, let's say, very hot sectors like AI. And I think we're all going to have a bit of a reckoning with what types of AI companies are out to succeed and what others are destined to fail. But I do believe that we're in for a beautiful era of automation. So even for traditionally kind of techie sectors like, let's say, delivery, I feel like there's a huge wave of disruption that's going to happen vis-a-vis software. And I also think that AI will take its rightful place among that automation as well. And I think we're going to see some very, very successful stories here from AI. But I just don't think, well, sorry, let me kind of preface this by saying, I think a lot of these AI companies will not be copycats like, venture capital 2.0 of the last 10 years, or just kind of copycatting companies. And that's because, you're kind of dealing with different types of data, right? So data centers in, let's say, Egypt are extremely different than data centers in the US, and the kind of cleanliness of data is very different. So I think we're going to see a lot of success stories there.
Okay. Do you believe the MENA region should combine as a regulatory system, or do you think we should stay this fragmented market? Like, what do you think is the best path moving forward?
Yeah, I mean, of course, if we have a common regulatory framework, at least for an economic, at least, or that kind of extends towards companies and ventures, that would be beautiful. I think it'll be incredibly hard to implement, though.
Uh, would it be possible in the future
Yeah,
to happen? Okay.
it is.
I want to jump back a little bit from VC to take you as a founder. You mentioned you co-founded Sequence. Tell us more about that. Why? And what I really am aiming for is the SME market, small, medium businesses, is something I'm passionate about. I think this is the core of any economy. Yes, we love startups and they're the next unicorns, but small, medium businesses are the core of any economy, of job employments, of creating money. How is that in the region? After you came back from you were in the US
I
before.
was, I was in the US, I was in the UK, and
Yeah.
then I was in Dubai as well.
Okay. After seeing the US and the SMB market in the US and coming back to the region, uh,
Yeah.
how do you view it?
Look, I mean, I remain to be a passionate worker, let's say, for and student of the SME space. You know, and again, maybe I'm over-indexing on definitions here, but when you think about it, what kind of sets a startup apart from an SME? And I think it's an open question, but like the way I like to think about it is a startup, just to kind of borrow from Eric Ries here, a startup is a company that's operating in extreme ambiguity and uncertainty. Whereas an SME, kind of has what we call product market fit, right? In our space. And maybe they've had, they show lower growth, maybe, who knows? But I think every startup can eventually become an SME, and every SME can have a startup engine to it as well that they can kind of venture build. So I think the two are very closely related. Look, I mean, for me, I feel like the funding gap in SMEs remains to be one of the glaring difficulties of the MENA region in its entirety. I think the figures are staggering. I forget them now, but like, large funding gaps there. And I think, the other thing that separates startups from SMEs is the growth mindset, right? So you have an audacious, or you have a founder with an audacious vision. That's usually a startup kind of mentality. Whereas in SMEs, maybe you have more traditional thinking, slow growth. You have a lot of overhang. You don't really trim the fat, so to speak. But yeah, look, I still think that the two intersect widely. And I think a lot of our startups are serving SMEs, and a lot of these SMEs, again, are becoming startups in their own right.
Why is that gap in funding? What's the reason behind it? Is it not a hot market? Is it not a lot of investors want to get into it? Like, what's the reason?
I think it's readiness and suitability mostly. So I
Okay.
think banking has traditionally covered SMEs as far as funding goes. as we move more and more away from hardware into software, a lot of these companies become unbankable because of a lack of collateral, right? So you can't put up a piece of land if you don't own land, and you thereby can't get funding. So that's why you have like middle market private equity as an asset class kind of tackling that. And again, I think there are regulatory issues, there are like compliance issues, there are just vision issues as well. A lot of these SMEs don't have clear visions from founders that are like seeking growth and economic value. Scale is the bigger one, right? So a lot of these SMEs operating in traditional sectors find it very hard to kind of break through the boundaries of across economies and to kind of expand there. So I think that's why it exists.
Okay. You spoke about SaaS and digital infrastructure. I want to ask this question, and from your look as investor, meeting with founders, seeing the market, do we have, and are we going to see a unicorn in the MENA region in the next 5 to 10 years again? Just like Kareem, just like Anghami, just like Swivel?
No doubt. No doubt.
Okay. Did you invest in one recently?
Yes.
Would you mind sharing the name?
Well, look, all of our companies, I feel, are headed towards that path. I mean, I'll tell you a bit more about that, but I think any company that we invest in, we have to believe will at least 10x. And given the stage that we invest in, you're already talking about a belief that our companies will be worth north of $300 million. We recently passed 2 companies through IC. We haven't announced them yet, so I can't tell you the names.
Okay.
But I believe both companies have a major chance of achieving unicorn status. And again, our companies currently in our portfolio, User Pilot, Busta, and Cartona, I think have a major chance as well. So I'm a big believer in all these companies.
I want to get into the technicals. We haven't spoke about that yet, and I think we should have defined that. Okay, what size check does Silicon Badia invest, and what stage does Silicon Badia invest in?
So we can invest up to, I think our check ranges are from about $1.5 to $6 million. Our sweet spot is about 3. So given where the market's at today, and the quality of startups we're seeing, and the business plans that are being funded and underwritten, I think $3 million as an initial check is what we go for. And we typically want to own 15 to 20% of the business at the time of initial investment, obviously plus minus, right? But like never above that usually.
Right.
We believe in founder-led businesses, and we believe in behaving well early on to avoid structural issues in the future.
Are you guys sitting on the board of these startups once you invest in them? Are you keeping the founder doing his work? Like, what's your investment strategy here? Like, I mean, we see founders fund, they invest in startup, kind of leave the founder to go. On the other hand, we see Sequoia, where they're really down on the founder's neck, firing founders before. Where do you sit?
I think we sit in between, to be honest.
Okay.
Like so, we never invest in a company whose founders we believe need to be fired. Let's start off by saying that. Like we are allies of the founders, and we feel we are their institutional partner. So just by virtue of our region being very fragmented, and by virtue of numbers in individual countries, we know that all of our startups need to scale from whatever country they start in, whether that's Saudi, Egypt, or Jordan. Like, it doesn't matter. If you're a Lebanese company, it's obvious that you need to scale. Less obvious if you're an Egyptian or a Saudi company, but we still believe that all of our companies need to scale beyond their borders. And we believe it's much easier for them to do that with us as institutional partners, because we've invested in companies across the MENA region. And we believe that hand holding is a bad idea. Obviously, you're a founder. You want to kind of unleash yourself, and you kind of want the rocket fuel to do it. And micromanaging from the board or or any kind of level is not a good idea, at least for us. So we try to maintain a balance. We're always there for the founders. We help them out in internal matters. For example, we help set governance. We help them with financials, with setting up their finance and accounting functions. We help them with go-to-market ideas, and we help them with hiring. We help them with key customer relationships that we've known through our portfolio that could kind of benefit them. So we try to give them shortcuts. We try to shorten the time that they would have taken them to do it on their own by a factor of 10.
You mentioned there are startups that are going to be unicorn in your portfolio. Are there and if every investor has this startup where he met with the founders, but he missed or he passed on investing in that he regrets today. Do you have any regrets today as an investor?
Well, look, I've only been in the saddle for 9 months, so I can't say that I have yet, but we'll check back on that in a couple of years.
Okay, I love that. Here are some fun questions that I always like to ask my guests. What is one belief or a way of thinking you have that people would call you crazy for?
I am optimistic.
Okay.
And I think many in our region, well, less so today, I feel, but I always feel things are going to work out, and things are always going to be better than they used to be. And I believe optimism shapes the world we live in, and also try to be realistic as well as to when that optimism is gonna kind of unfold. But I think that's one belief that might not be very common here.
Okay. What is one belief or one value or one investment decision or one decision you've taken that you would decide to change?
Hmm. Honestly, that's a very hard question to answer. So look, I've learned a lot. I mean, look, I've also done startups that have failed, right? So it's easy for me to come and say, look, I would have done this thing differently and that differently. But thinking with my mind today about something from the past is almost an unfair thought, right? Because the reason I think the way I think today is because of these failures in the past as well as the successes, right? So honestly, if there's one thing I would have changed, maybe it would have been to kind of experiment more, even, and not be afraid of trying more things out, and even if it meant failure in them. But I wouldn't say that I would change anything, to be honest, today.
I love that. Here's a question you may pass on or not answer, but I'm trying to integrate more questions that are kind of shocking or taboo in our region. Have you made $1 million as an investor or like as a startup founder? Have you had the number $1 million in your bank account?
No.
Okay. What startup idea would you build today that if you were a founder, you're like, okay, that's a problem I want to tackle?
That's a very interesting one. So look, when I was doing when I was a co-founder of Sequence, we venture built a software business within Sequence and kind of spun it off called Robu.io. And Robu was meant to be a software that serves as your CFO, right? So like for a lot of these SMEs and startups, you can't really afford a CFO, or you don't really need one full time. And then you had like all these traditional kind of spreadsheets that you were using. So, we wanted to build a financial planning software that helps CEOs make better decisions. And we kind of found it very hard to find product market fit, maybe because we were kind of first time tech founders at that point. But I still think that that's a major problem that's being solved through different kind of modules today, in the CFO stack, kind of space. And Silicon Badia recently, we had an exit for one such company that does expense management called Expensia, based out of Tunis. So I think I would focus there. I think building startups in the CFO stack space, kind of connecting accounting with finance and decision making is huge. Like I think there's a huge infrastructure play there to be had. Yeah, I think that's where I'd focus today.
If you had all the money in the world, unlimited amount of funds, what is one word problem you would aim to solve?
World problem?
Yes. Or like a problem you see that's not specifically tech or startups, but something uh, on a world level, or maybe in Jordan, or maybe in the MENA region that you see that, okay, I'm gonna dedicate my life to solving this problem.
Economic access and equality.
Okay. Does Bitcoin or cryptocurrency solve this problem?
No,
Okay.
no.
Uh,
I think just to kind of expand on that. I think inequality, income inequality and social inequality I think are kind of hand in hand these days, right? And I feel it's because the means of production and the means of, let's say, resource production are increasingly in the hands of fewer and fewer people. And I feel if you can empower upward mobility towards sharing some of these economic resources. Well, I'll give you an example. If you had $1 billion today and you went to a country that has 10 million people, and you gave them each an equal amount of money from your 1 billion, okay, that wouldn't solve economic inequality because they don't own the means of production, they don't own the means of wealth generation, right? um, and I think the way we think about money today is payments, right? It's like transacting. But if you think about money as um, capital allocation and yield, then I think the whole story changes, right? So that's I think you have a lot of social problems because of this, major issue.
yeah, and just to highlight that, I think me as a Lebanese person and the whole economical situation that happened in Lebanon, today we got Egypt, a lot of MENA country regions that are not GCC focused are having these economical problems. And I think the number one issue is that we always thought about money as in Lebanon, for example, the source of income for Lebanon was tourism and outside capital being deposited in Lebanese banks. And we didn't build manufacturing facilities. We didn't focus on agriculture. We didn't teach people how to do these type of jobs. And that's sad. I think today Egypt, I'm a big believer that Egypt could be the next China of the region in terms of having a huge population, huge amount of lands, uh, skilled and cheap labor, which could be a great way to build manufacturing facilities to support the whole region because we got the capital in the GCC, and we Egypt could be the labor and the land of manufacturing, uh, and that's not being the focus at all.
Mm-hmm.
And just like you said, it's about capital allocation, and that's what we need to focus on. Hamid,
Yeah.
I really appreciated this episode. Uh, just to be honest, when I came to put down the questions, I'm starting to change how I put down questions, asking more philosophical questions, integrating these like deep thought questions. And I was afraid of putting them down and like seeing your feedback, but I think you read a lot because you referenced a lot of books and a lot of sayings from and quotes from different people. You're very knowledgeable. I love that. I enjoyed the episode, to be honest. I think you're going to be a great investor. You have a great vision going forward. I appreciate you being on the pod. Where could people follow more of what you're doing? How could people see what is Hamid is up to? Feel free to share any links or and any final thoughts.
Thanks, Ahmed. I really enjoyed being on the show as well. And well, first of all, congrats to you for kind of going out there and doing this podcast in the wee hours of the morning where you are. So I really respect that. And thanks for the kind words. I'm starting to get more and more active on LinkedIn now, so people can follow me there. And yeah, I look forward to having more chats with you.
Thank you very much.